Welcome to TheoTrade. This is Don Kaufman. Here we are. It's January 11th, 2017. We've got about 30 minutes left in the trading day. What has actually been another rather non-eventful day. So the S&P's right now, again, about 30 minutes left to play in the period. Up a whopping 3 handles. Nothing huge over here. Volatility backs off very mildly. Interestingly enough, the bonds are slightly bid up after rallying, dipping a little bit. Again, there was a news conference today from the president-elect that did cause just a slight bit of intraday volatility. But again, trade, generally speaking, this week has been chopped out, hasn't had really a real feel or direction to it. That's not what you want, especially, of course, as an intraday trader. Moreover, if you take a look at things like advanced decline line, it's sloppy out there. I mean, I'm talking to other traders here throughout the course of the day, and they go, what's going on? More slop trade out there. Nevertheless, I found a little bit of opportunity inside of a specific trade. I'm going to display just that to you. So we're going to take a look at the EEM. That's the Emerging Markets ETF product, and I've started to execute a number of positions inside of the EEM, henceforth why I'm actually recording this while the market's still open. So let me go ahead and close up the left side bar. Now, for those of you looking at the EEM, I've initiated a position 37 days out. Granted, I haven't looked at a chart yet, right? Yeah, you're probably wondering, well, what is the EEM doing? Not the point just yet, okay? So I always start searching for my trades, okay, here in the trade tab. First and foremost, the EEM, because it's an ETF product, you don't have to worry about an earnings announcement, okay? Which is critically important right now, as you know, the rest of the S&P 500 is about to pass through earnings. So at this time in a quarter, when we're starting to approach earnings, speaking of earnings, you're going to have the financials presenting earnings this Friday, specifically Friday morning. You know, some of the big banks are out there, the Bank of America's, the JP Morgans, pretty much all the banks, okay, will have reported by Monday. Again, some of the larger banks reporting this week. Really, earnings hit full force next week. Nevertheless, at this time of a quarter, I often look towards the ETF products so that I can kind of circumnavigate earnings, which makes my trade that much more of a gamble. And in the case of the EEM, one of the first things that I would look at over here is I start opening up individual expirations, whether it's the weeklies, whether it's the standard monthlies. I start looking at bid offer spreads, okay? Clearly, as I freeze the screen over here, you can take a look at bid offer spreads. People, it doesn't get much better than that, right? We're 60 cents at 61 cents. You better ask yourself, the products that you trade, do they trade with markets that are that tight? I mean, these are things that you got to just walk through a checklist. Check, check. Look at the volume in here today, right? What, 1,400 contracts? I mean, there's 10,000. That's the volume. That's 10,000 contracts. A lot of people don't even look at the EEM. Great, okay? In addition to it, once in a while, I'll even cruise down to see the total number of contracts. You realize this is a product that a lot of people don't necessarily pay attention to, okay? And what? 693,000 contracts have traded on it. That's a big enchilada, right? This thing, all of a sudden, you know, it's another $36 stock. Yeah, well, the 800-pound gorilla in the room over here is not that it's just trading 700,000 contracts. Okay, if you look at the Sizzle Index, what the Sizzle Index tells you, it looks at today's option volume versus the previous 5 days option volume. In the case here, we're trading 3 times the normal option volume. Why? Don't know why, but I can tell you one thing, okay? 4 times the number of puts are trading. 4 times the number of puts, again, versus the previous 5 trading days are currently trading in the EEM. Now, does that give me a little bit of a directional bias? No, it really doesn't. Not necessarily so. I'm actually placing the EEM trade based on a bit more of like statistical analysis. And my stat analysis over here is looking, okay, at one of the most recent moves. Now, you guys might use technical analysis. That's fine. I'm actually going to show a little bit of technicals, but quite simply put, here we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trading days. Okay. All I did was ultimately just counted out the number of trading days over here. What do we have? We have 13 trading days. 13 trading days for the most part. What do we've had? Maybe one real down day, but that's neither here nor there. In 13 trading days, we've moved okay, from a price point of what? Here we are at 34, and we've moved all the way, okay, to 36.50. So what do we got? It's roughly a $2.50 move. Okay, now we're getting somewhere. Go back over here to the trade tab. Okay, this is a 16-day window. Now that's 16 full, not just trading days, but this is calendar days. A typical move in 16 days, again, a typical move in 16 days sees the market moving about $1. So right now we've already moved $2.50, okay? So you can say on a statistical level, we are stretched, okay? We are absolutely stretched. You know, we're 2.5 times the deviation over here. It's one of the pieces of criteria I look for taking kind of a contrarian position, right? In addition to it, if you guys are into technicals over there, and again, it's okay, all right? It's okay to be in technicals. So when you take a look at this, here we are, we're using an RSI Laguerre, and this RSI Laguerre, okay, for the most part, similar to an RSI with fractal energy packed into it. I'll kind of zoom you in over here. The fractal energy is run out. Okay, again, I'm trying to display it just like Jeff Bierman would possibly, Doc Severson. Sure, so the fractal energy is run out. So that means the move of the recent move to the upside. Ultimately, most of the energy is out. In addition to it, we're in overbought land over here, and then some. In fact, when you start to scroll back on the screen, you don't really see at any other point in the year, other than maybe back in this neighborhood here. Okay, there's periods of overbought. They sold off a couple of times over here, but there's very few periods of time that you can point out that we were sustained overbought for this duration over here. Anyway, so that is more of the technical take, and I'm sure I could bring up umpteen different technical tools that would provide more evidence for the situation that the underlying EEM, of course, is overbought. Again, much more important to me is, tactically speaking, how you actually construct the trade. Well, this is an in-out spread. We're going to go out and we're going to buy a 37.5 and sell the 35.5. Listen, the premium out there, it's low. Like, I'm not going to sell anything in this particular marketplace, right? So I'm going out there and I'm working orders. I've already filled 6 contracts. The mid price on this now is about 90 cents. And again, I'm going 37 days out. I'm buying the 37.5, selling the 35.5 for about a 90-cent debit. I'll hit confirm and send. As I hit confirm and send, okay, the order is what? Just working now. Now, if I don't fill, I'm not filling, you could always turn around and cancel or replace order. Now, most of the time, though, I let stuff work. Okay? You can cancel or replace this order 100 different times. Let trades work. There's no need to force price out there. But for those of you that are interested, where can you get filled? Where can you not get filled? You can try coming in here at 91 cents, right? And see, am I going to fill at 91 cents? You can play around with price. Obviously at 91 cents, I filled almost immediately. After I fill there, I'll come in here and I'll create a duplicate order and I'll work them one at a time. Well, I know I can fill at 91 cents. Can I fill at 90 cents? Okay. This is how I literally work my contracts. Why work 10 at a time when you can work them one lots? And frankly speaking, I've got the time to burn right now. So I play around with price over there, always trying to retrieve the best possible price. People constantly discuss, about execution and so forth. And I'm telling you, work your orders. People complain about commissions. I complain about the way you get your trades executed. Trade execution is as important as the trade itself. So for the most part, I'm going out and I'm purchasing this spread right in and around this 90-cent debit. And again, I'll create a duplicate order and I've got a bunch of them working over here now. I filled 7, have a few more working. So I've filled this thing right around 90 cents. I'm going to look to exit the trade when I've made approximately 55% profit on the 90-cent debit. Thanks everybody for joining us here at TheoTrade. My name is Don Kaufman. Be back in the TheoTrade chat room all throughout the course of this week. If you got questions on the EEM spread, hey, join us in the TheoTrade chat room any day. We're there to answer them. Thanks everybody. Bye-bye.